From IG joins us now from Melbourne. Stan, good to see you there. Interesting to see that fiscal cliff. One day the headlines drive the market up, the next day drive the market down.
Yeah, absolutely. We had obviously seen a pretty decent run by markets across the boards over the past few sessions, mainly driven by that optimism around the fiscal cliff negotiations. And of course, in true fashion, as soon as the cracks started appearing, we did see investors start fleeing some of those risk assets. We saw pretty big pullbacks in US equities, as well as some of the risk currencies. Of course, we were well bid in the European session with that optimism being ridden to the absolute max by investors, and as well some fairly positive German IFO business climate reading. So it does seem like at the moment, with where leaders are, the gloves are off. They had been playing nice for a while. I think everyone was just expecting some sort of a deal to be knocked up without too many problems. But of course now with the Republicans pushing through that Plan B, looking to get it voted through, and at the same time the Democrats looking to veto it, it certainly seems like we're at an impasse, and we'll probably have to see how things progress, although the leaders are still insisting they're hoping to have something done by Christmas. It does seem like a lot of work needs to be done for that to actually go through by the time we get to Christmas. I suppose the standout was the euro dollar, which made a move up to 133. It's since pulled back on the back of that fiscal cliff issue, and it's now back into the 132.4s. The Aussie dollar is down below 105, and that's of course been struggling for a few days now. I think there's a lot of skeptics out there on the Aussie dollar. No one really knows what's happening with interest rates, and at the same time, it just seems like the economy is just stalling. With recent economic data just not showing the signs that everyone wants to see. We've got potential for some intervention coming up along the way, and at the same time most of the banks are now calling for more interest rate cuts next year. So there's a lot to consider at the moment. Ahead of the open, we're still calling the Aussie market a touch higher, probably trading at around 46.30 at the open. This is quite surprising, of course, because of the leads that we've gotten from overnight trade. And at the same time, we are calling BHP a mildly weaker, down about 0.3% to about 36.94, down below that $37 again. So it does seem like we might see the market just struggle a little bit at the open there. Of course, there's quite a number of things to look out for, particularly with iron ore prices rallying to 135.50. I suppose they've been having a pretty good run, but it does seem like we might see some of the investors who have been piling back into these risk assets just start to exercise some caution as well, and perhaps get back into some of those yield plays. So the banks might be in for a strong open. We might see some money flowing back into some of those defensives like CSL Limited today. And at the same time, there's some key risk plays to look out for, like Billabong, which obviously had plunged yesterday. A lot of brokers are still doubtful on the deal going through, and at the same time that downgrade didn't do them any favors at all. We'll look out for James Hardie, Boral, the guys who are exposed to those US housing starts numbers that we got last night. So there's quite a bit out there at the moment, but fortunately we are looking at a relatively flat to mildly higher open.
Okay, all right. And just, of course, looking ahead, Bank of Japan, what are your expectations for what we'll get from that meeting?
Yeah, of course, Japan's been on focus all week. We saw the Nikkei up about 2.3% yesterday. It's back above that 10,000 level. Since the elections, I think pressure has been mounting on the BOJ to act today. Of course, they probably are thinking we might just hold back till next year when we've got a more defined plan of how we're going to counter this ailing economy. But I think the new Prime Minister has made it very clear that he wants action now. We're hearing calls of around 10 trillion yen of a 10 trillion yen increase in asset purchases. So that might be the highlight of the session. At the same time, we need to hear more sort of a more clearer inflation target, and that might be anywhere between 2 and 3%. So there's quite a number of factors that might help drive the Nikkei higher today. but failure of which we'll probably see a sell the factor fair. We'll probably see the dollar-yen pull back significantly, and at the same time the Nikkei might come back and retest that 10,000 should we not get anything that the market's fairly convinced by.
Stan, as always, thanks so much for that.